Today I'm going to be giving you guys a full course on Forex for beginners. I've been trading Forex for the last 3 years and it has really changed my life. I started thinking, how could I really provide value to others that were in my exact same position? And I thought to myself, there's nowhere else to start but the beginning. I thought back to the beginning of my Forex journey and I remember I couldn't even understand the charts. It looked like hieroglyphics. It looked like a different language when I looked at the trading view chart. I was just so confused. I did not understand what was going on in the market. Today I'm going to be your translator. I'm going to show you exactly what everything means, why this happens at this time, all the basic essentials that you need to start making money today. Let's get right into it. Let's start off with the basics. What exactly is Forex? Forex is the foreign exchange market, right? So you're trading currency against another currency. Right here we're trading the British pound against the United States dollar. What we're basically saying is the British pound stronger or weaker? Whatever one's in the front, the first pair, that's the one that you're trading. Right now we're trading the GBP against the US dollar. For instance, if we were to take a trade right here, we will be betting that the British pound is going to be stronger than the United States dollar. It pushed up, which made it stronger. Essentially, that's what Forex trading is. No reason to complicate it. We're just betting, is this one stronger or weaker than the other pair? Next, we're going to get into candlestick. What is a bullish candle and what is a bearish candle? What is a buy and what is a sell? If you look at this candle right here, this big strong candle, this is what you call a bullish candle. When we're going up, it's bullish. And when we're selling and going down, bearish. You could just think of it as a bull. When they strike, they hit up with their head. And with a bear, which is bearish, they strike down. Simple way to think about it. I'm going to give you a couple examples of a bullish and bearish candle right now. Okay, bullish, bearish, consecutive bullish candles, bearish candles. Simple. There's no need to complicate this. Let's keep moving on. Now there's 3 different types of market conditions when you're trading. There's an uptrend, downtrend, and consolidation, sideways trend. Now this is very important because you always want to trade with the trend. You need to locate and identify what trend you are in. Easiest way to do that, zoom out or reset the chart, zoom out, and you can see this. What are we doing right here? If you just had to just open your eyes in 3 seconds, tell me what's going on, you could obviously tell we're going up, right? We're going up. So you could also draw a trend line just to, let you know where price is bouncing at. But we'll get into that in a little bit. So price is going up, obviously. So what do we want to do? We want to buy. We want to only be looking for buys, which is bullish candle, bullish structure. And in the uptrend, we're going to be making higher highs and higher lows. This is very important. Make sure you write this down. Higher highs and higher lows. That's how you know when you're in an uptrend. Because sometimes it can get tricky. It's not always going to be just going straight up. So let me zoom in here. Now you might be thinking, what is a higher high and what is a higher low? Okay, if we're starting from here, this is a higher high. This is a higher low. This is a higher high. This is a higher low. You see how price is getting higher and higher and the lows are not breaking each other. You see how this low is higher than this low? This higher low is higher than this low. And this higher low is higher than this low. This higher high is higher than this higher high. This higher high is higher than this higher high. So if we're making higher highs and higher lows, then you want to be trading with it. You want to be looking for buys only. You're going to wait for a pullback and then wait for a reaction and then enter. I'll be showing you guys all that in a little bit. Now let's look at bearish market structure. Okay, starting from here, we got a lower low. We got a higher low. We got a lower low. We got a higher low. We got a lower low, and so on and so on. So you see the structure, it moves in a certain way. It's not just random. You gotta locate the higher highs or the higher lows to determine what trend you're in. Very important, do not skip over this. Write this down. You wanna trade with it. The trend is your friend. Never trade against it or you will be losing. Now it's time to understand support and resistance. Very important, do not forget to write this down as well. Basically what support and resistance is, you could think of it as a roof and a floor. So resistance would be the roof and support would be the floor. Think of it as 2 walls, trying to break through or being respected. Being respected means that it's going to it and it's not breaking it. It's rejecting it, which means it's falling away and leaving wicks. See these wicks right here? Let me zoom in. This right here is a wick, right? This is the candle body and this is the wick, right? Basically like a tail. When that's rejecting a support or a resistance, it's respecting it. It's not disrespecting it. It's not going through and breaking it. After you figure out what trend you're in, what your higher highs and higher lows are, you're going to start drawing your support and resistance zone. So right here, we're in a bearish market. We're going down. So what you're going to do is look where price is gathering. You can just think of it like that. So if you just look back, always look to the left. What happens to the left will happen to the right in the future, right? So you see price right here is gathering. So you could draw it right there. You see it gathered right there. You could even pull this to the left and you see it came here, respected it, disrespected it, respected it, came back, came through, respected it, broke through, came back, respected it. So support and resistance is basically just a wall that price keeps bouncing off of. And these zones are basically key levels that you want to be looking to take your trades at. So this is very important. You can see right here, price broke through, has to come back and retest it. We could draw another one. Draw it at the low. When you mark your higher highs and higher lows, if you're in the downtrend, typically you want to draw your support and resistance with your higher highs and higher lows and lower highs and lower lows. So right here we're in a bearish market, so it's lower highs and lower lows. You made a lower low, most of the time you're going to draw a support right here. You made a lower high, most of the time there's going to be a support right here. Simple like that. Locate the higher highs and higher lows. You see a lower low, draw a support, you're going to see it's being respected. That's basically what it is. It's a wall that price is not going to break through. You want to enter a trade, and I'll show you in the future, but this support and resistance will basically be like a wall or like a protection from your stop loss to get hit. Because if price breaks through this strongly, it's not going to go in your direction. It's going to go the other way and you're probably having a reversal. I will show you exact strategy step by step on how to make money with this today. This is resistance. This is basically a roof. Now I'm going to show you guys support. Okay, right here we're in the uptrend, so we got support. Mark the higher highs, which is right here. Higher low right here, right? What we're going to do is draw a support. Got the higher low right there. You see the support. It's touched right here a couple times, broke over, respected support, and now we're shooting up. So just draw more supports. Support, support. You see it's always going to be there and it's always going to be respected. And then once we break that, we're going to be going down. It's a reversal. You see how it came up here, it struggled a little bit, and it went down. Now that you understand support and resistance, we're almost at the finish line. You need to understand that the higher time frames will always be stronger than a lower time frame. So let me show you exactly what I mean. Right now we're on the daily time frame. If you look right here in the left corner, you can see all the time frames that we have. 5 minute, 15 minute, 30 minute, 1 hour, H4, daily, and 1 minute. The higher you go, the more respected that it is. So you always want to put the higher time frame over the lower time frame. You see it uptrending on the higher time frame, but it's downtrending on the 5 minute. You're going to disregard that 5 minute and only look for sales because the daily is in a downtrend. Whatever is on the weekly, the daily, and the 4 hour is going to be way stronger than what's on the 5 minute, 15 minute, and the 30 minute. If it says it's on the uptrend on the daily, but the 5 minute says it's on the downtrend, you're going to listen to the daily no matter what. Higher time frame trumps everything below it. And that goes with everything, with trend lines, support and resistance, candlestick patterns. Everything is stronger on the higher time frame. So every morning when you get up to trade, you're going to want to do a top-down analysis. What that is, you're going to start from the highest time frame. I wouldn't go any higher than the weekly. You're going to go to the weekly time frame, and then you're going to go to the daily. You're going to mark up your zones, mark up your higher highs and higher lows, your support and resistance. Then you're going to do the same thing on the 1 hour, and you're going to do the same thing on the 30 minute, all the way down to your entry time frame, whatever you want to enter on. So if you want to be a scalper, you want to enter on the 5 minute, you're going to start from maybe the 4 hour or the 1 hour and then work your way down. If you want to be an intraday trader, you're going to start off the weekly, the daily, the 1 hour, and then you probably enter on the 30 minutes. So you always want to make sure you do a top-down analysis. Do not skip this step. You need to know exactly what's happening through every time frame before you take this trade. Which brings us to our next topic, confluences. What a confluence is just a reason. Just think about it like that. You need 3 confluences to enter a trade. You need 3 reasons to say that this trade is about to go up or down. One confluence is if the higher time frame says we're going up and your 5 minute time frame says we're going up, that's one confluence. That's one reason that you should be buying. Now, if we're rejecting a support going in your direction, then that's another confluence. That's the second reason why you should be buying. Now, if you get a candlestick pattern at that support heading in your direction, that's 3 confluences. Take the trade, no hesitation. This is a game of probabilities. If you have 3 reasons why it's going up and no reasons why it's going down, then most likely you're going to win that trade. Now that we have all the basics covered, I'm going to show you guys how to put it all together into one strategy that's going to make you money today. This is the ultimate support resistance strategy that you see traders use, like Lambo, Daniel Savage, all of them. Everybody uses support and resistance, and some of them actually only trade this. Let's get right into it. First, you're going to want to start off with the 4 hour or the daily. For this purpose, I'm going to do the 4 hour. If you see in the 4 hour, we're going to go through, we're going to draw our support and resistance. You see price is gathering right here. Remember, look to the left and then look to the right. Draw supports. Support right here. Look right here. Look to the left, look to the right. So where is the price touching the most times? Draw right here. You always want to draw it out so you can see it in the future. Okay, so what's going on right now? The bullish buyers have pushed the market up, and now we're coming back for a retracement to retest support. You see this support right here? We're retesting it right now. We got 1 retest, 2 retest, 3 retest. We got a big wick. You want to wait for a big wick with big reject. This is a cool one. This is not really strong. This is like, okay, we do not want to go down. We're rejecting this place hard. So now what we're going to do is go to the lower time frame, to go to the 1 hour. Okay, the 1 hour rejected it, and now we have a big strong bullish candle coming back up into it. We broke out, which basically is a rejection on the higher time frame, and we came back in. And now we got a hammer candle, which is a candle with a small body and a long wick. This is rejecting hard. This is a good sign for us to buy. Now we're at the 30-minute, and this is going to be our entry time frame. Now you could go lower if you want, but I'm just going to stick to the 30-minute for this example. Now that we see we're going up on the higher time frames, we're at a strong support. We're going to wait for a candle to give us the entry. Now we got a good rejection candle, which is great. You could enter off that, but I'm going to wait for a bullish engulfing. Basically what a bullish engulfing is a candle like this, but this is a bearish, but it covers the last candle, right? This is the last candle. This closed under it, which is a strong indication that it's going to go that direction. So that's what I'm going to wait for. You haven't got it yet? Okay, this is a strong bullish engulfing. I would have got in once it broke this candle high right here. But you know, you can't see that on backtesting. It only shows the whole candle. But you could enter right there. You could enter on the close. Whatever you want to do. I would enter it right here. Stops below. You always want to put the stops below. This is the lowest part that it went. So you want to put your stops below that. Because if price comes down and breaks this wick right here, you don't want to be in the trade anymore because it's probably just going to go down. And when it comes to risk to reward, you want to aim for a 1 and 2 minimum. If you do the 1 and 1, your win rate has to be so high it's ridiculous. The higher your risk to reward, the less that you have to win during the week to be profitable at the end. Minimum 1 to 2. So we're going to put this to a 1 and 2. There it is. Now, if you would have entered when I would have entered, you would have already been up almost 1.5, 1.2 around there. So let's play this. Okay, 1 or 2 hit, you made your money. Now you get off the charts. You don't look for no more trade. Start trading too much, you're gonna blow your account. Why make a winning day a losing day? So if you win your trade, you're done. If you lose, maybe take one more. You gotta figure out your own risk to reward strategy. Maybe I'll make a video of that next. What I like to do is take 1 trade a day. It just keeps me profitable and not overthinking and over trading. Because once you lose 1 trade, your emotions are everywhere and you just start making mistakes that you shouldn't be making. So now that you hit your 1 and 2, what does that mean? That means you risk $1,000 to make $2,000. If you would have risked $10, you would have made $20. So as long as you're making double or more your money, you should be profitable as long as you're not over trading. So if that was hard for you to understand, just rewatch this video. Make sure you take notes and listen to every word that I'm saying. This is very important. This will make you money. You don't need all these indicators. You need price action. What is price doing? So now that you know the strategy, what is the best time and what is the best pairs to trade? The best time to trade is either London session or New York session. Now there's 3 sessions. There's London, Asian, and New York. I recommend to trade London session or New York session. Is the best time to have good pushes and good moves, so you're not just stuck in consolidation, which is a sideways market where you're not making any money. So you need to look up on Google what is London session for you. For me, that's 12 a.m. midnight to 5 a.m. in the morning, and then once it hits 5 a.m. to like 12 a.m. is like New York. I live in California, so you need to change that to your time. Just Google it up. Now there's a lot of Forex pairs that you can trade, but I would stick to these 4: AUD USD, GBP USD, GBP JPY, which is really the most popular one that people trade with this support and resistance strategy, and Euro USD. Anything other than that, I would not recommend it because it's just too volatile. It just doesn't make sense. You won't make money on it. Just stick to these pairs. Trust me, I'm going to save you a lot of money and time with this. Now, once you watch this video over and over and you understand everything, support and resistance, trending market, candlestick patterns, everything, what you're going to want to do is backtest, backtest, and backtest. This is the most important thing. This is like your homework. This is what's going to save you so much money. The more you backtest, the faster you will get rich and profitable. Now, this is not going to happen overnight. I'm sure it's happened in the past, but it's not likely. I'm going to tell you right now, you're not going to make it overnight. This is going to take months and months of hard work. You need to do this every single day and really burn it in your mind. So when you see these setups, it's like second nature. You know it's going to go your way. Basically, how to backtest. I'm going to teach you exactly how to backtest. So what you want to do is go to your trading view, and there's this replay button right here, right? Now you need to sign up for the monthly subscription. I think it's like $10 or something like that, but it's worth it, trust me. So you're going to go to replay mode. It's going to pop up this blue bar right here, right? And wherever you go, it's going to rewind time until then. You're getting actual historic price of what happened on that day at that time. So what you want to do, so there's no cheating, you want to come right here to this right bar, grab it, Make it as small as possible so you can't see what's going on. Do not cheat and do this step. Then you're gonna push the bar. Right now we got the blue bar. Now you're gonna scroll all the way to the left as far as you can go. You're gonna push it right there, and then you're gonna do it again. Click this bar all the way to the back. Keep doing it all the way to the back. Now you're gonna reset the chart. Today is actually Christmas, and I went all the way back to May 22nd, Monday at 12 o'clock. And this is when you're gonna start trading. You can go to your 4 hour. You're gonna draw your market direction. We're going up. And so on and so on. This is where you're gonna start. You're gonna backtest and backtest and backtest. This is what's gonna make you rich, bro. This is everything. This is Forex right here, is the backtesting. Now, once you backtest and backtest and you get used to seeing all the patterns and the supports and the trend line, you're gonna wanna start demo trading. And then put money into a live account once you've been successful with the demo account. You should see profit. But this is not gonna happen overnight. This is not a get rich quick scheme. This is gonna take time, hard work, and dedication. So make sure you guys keep on practicing every single day. Hit the subscribe button because I'm going to be dropping more full courses and advanced strategies to take your trading to the next level. But I'll see you guys next time. Good luck.